Welcome to the show. This is DIY Money.
What?
A little bit different. Just
Hey,
mixing
Logan.
it up. Just changing things.
What happened to money? Did I do it right?
I loved money, but no, you got to get it. You got to get it. Go into it a little bit deeper.
Money. What? I don't know.
Money.
There you go.
See? Better.
That's good. Your intro was very NPR.
Yeah, it did sound a little NPR.
Can you
didn't
do it with more excitement?
No.
No pressure.
I am excited,
You're
but
excited?
I'm excited because it's fall, and fall
Pumpkin spice.
means fall means football for me. I love football.
Mm-hmm.
Do you get into football?
Nope.
Well, are you doing like fantasy or anything?
I got suckered into a fantasy league for the first time in a decade.
Wow. And you watch a lot of football. We were talking before the show. You know exactly what all the players do and everything like that too.
I don't. You were making fun of me because I don't know what a running back does.
Well, you got it.
Because they run
From where?
from the back.
There you go. Good.
You guys still haven't explained exactly what they do.
So
I'm confused.
how's your fantasy team?
Good, I guess.
Okay.
Who did you pick in the first round?
My first round pick in one of my drafts, I was a late pick. So I was like 11 out of 12.
I was 10 out of 14.
Oh, wow. You have 14 people league. That's pretty big. I was 11 out of 12. I got Aaron Jones, I think, first round.
Who is he?
Aaron Jones is a running back.
Okay. Runs from the back.
Yep, exactly.
I got Kelsey.
Travis Kelce. Okay. Yeah. Tight end.
That guy.
Yeah.
Yep. In the first round.
Okay. All right. Well, he's pretty good.
He had some pointage, I guess.
Okay.
And he plays for Kansas City.
Yeah.
And they did something good, right?
Yeah. They went to the Super Bowl last year.
Last year. Okay.
They went to the Super Bowl. They didn't win it,
Okay.
but they went.
Oh, so he sucks.
Yes. No, they're actually.
I have a loser
They're
on my team.
really good. They're really good. You'll be good. Your team will be fine. I'm
Okay.
sure.
Who do you have for quarterback?
So I did that later down the draft. So I got Matt Stafford. I think he's going to have a great year this year.
And
Just saying.
who's he play for?
He now plays for the Rams. He played for the Lions for a really long time. I'm a huge Green Bay Packers fan.
Cool.
So now that he's out of our division, I can cheer for him a little bit more.
Gotcha. I've got
Yeah.
Wilson out of Seattle.
Yeah.
Yes.
Out of Seattle.
Somebody
he's
on
a
my
quarterback,
team in my
so-
league tried to get me to trade him, and I was like, I think he's good.
He's good. Yeah.
So I'm solid, I think.
Yeah.
I don't know. I'm rated 80% to win this week
Okay.
over my opponent or whatever.
Yeah.
So it's 80-20 favoring me.
I feel like you're going to be one of those people that comes into a draft and just picks like the top person, but you're going to end up like winning. That's what happens in every one of my drafts.
I read the blogs on the internet to figure out strategy and then created a spreadsheet. I had my list ready to go. So this is with my cycling team, okay?
Okay.
So it was hard enough because we did the draft during our Saturday morning workout. So it was a 6:30 a.m. draft while we were on the bike cycling. And I know nothing, so I had to have a spreadsheet ready ahead of time with like 5 picks for every round to figure out what we would do. And then it was changing dynamically because people would pick my picks, obviously, and stuff. That's how a draft works, I guess. So it was very complicated.
My 12-person league with a bunch of guys 1 year out of college definitely was not on cycling bikes. So you already had a different experience.
It was fun. I think we were the only draft going on at 6:30 in the morning.
Probably, but that's great. That is great.
All right. We do have a question today.
We have plenty of bro talk, so let's get to our question. Let's hear from Sarah.
Hi guys, thanks so much for the show. I've really enjoyed learning from your wisdom. My name is Sarah. I'm 30 years old, and in addition to my retirement accounts, I have a brokerage account with the goal of kind of growing my money while saving for projects, cars, etc. down the road. I've been looking into the idea of tax loss harvesting and was wondering your thoughts on this matter. Thanks. Bye.
All right. So tax loss harvesting, Daniel, can you give us the basics of, I feel like there's a lot of definitions we need to know for this topic, for tax loss harvesting and what that means. So can you give us a little rundown of that?
Yeah, we should almost do a money minute on this.
Oh, we will.
In case people haven't
I'm
seen
sure we will.
Instagram and Facebook, right?
Yeah,
and Twitter?
Instagram, Facebook, and Twitter, we all do money minutes
Yeah,
on
a couple times a week we put out a 1 minute or less, because I can't always talk for 1 minute on obscure financial topics, surprisingly. But 1 minute or less, we try to hit a interesting financial topic, and this would actually be a good one. So maybe we'll do that after the show. We'll make a 1 minute on tax loss harvesting.
Mhm.
It sounds really cool and very appropriate going into fall harvest festival
Yeah,
season.
absolutely.
So anyhow, tax loss harvesting, what it essentially is over time, you're going to have in your taxable investing account, you're sometimes going to have positions that have gone up significantly over time, but you'll also have positions that haven't done as well. Maybe they actually might be at a loss or under what you purchased them for. What tax harvesting allows you to do is it allows you to sell some of the positions that are at a loss, to also allow you to sell some of the positions that are at a gain, therefore neutralizing out the tax consequence of that. If you had just sold the positions that had a gain in them, you would have to pay capital gains tax if you held them for over 1 year, or normal income tax, short-term gains, if they were held less than a year. And so by selling some of the positions that are at a loss to offset some of the positions that are at a gain, you significantly reduce the taxable effect on your account.
Okay, so
That was a lot of jargon.
so
I'm
let
sorry.
me just
Yeah,
try
not
to
DIY
summarize
Money
that.
Junior.
So if you're bought 2 stocks,
Mm-hmm.
let's just say hypothetically 2 stocks, you bought both of them at $100, bought 1 stock each.
Yep.
The first stock goes from 100 to 110. You want to realize some of that gain, so you sell it at 110. You made $10 on it.
Mm-hmm.
If you did nothing else, you would pay either capital gains tax on it,
Yep.
or income tax on it if it was in a year period.
Correct.
But then for the other side, if that other stock went down $10, you could essentially sell it and neutralize it, not pay any tax. Correct?
Effectively, yeah.
Okay.
So your tax situation when it comes down to investments, capital gains, etc., is basically the net result of all of your sales or dispositions for the year. So it's not, you're not paying tax on every single transaction. You're kind of aggregating all of those all together by the end of the year and putting effectively your net short-term gain or loss and your net long-term gain or loss, and then those even kind of somewhat offset each other as well at the end of the day. So it's you can kind of aggregate all of those sales together to get kind of one number that is either going to be a gain or loss for the year, and then you're taxed on actually that particular number. So thinking about it holistically and going, okay, yeah, I own this particular stock that has done exceptionally well, especially this year in 2021. There's going to be some positions that have done really well if you're investing in individual stocks, and some positions that have just kind of limped along, or depending on when you bought them, maybe they are down. And so you can kind of help offset some of that. But there are some considerations that you do have to keep in mind when it comes to that. So if you were looking to tax loss harvest, what are some of the rules that you might think about?
Well, I think one of the biggest things that you have to think about is to make sure that you're not doing too many sales of the losses and not offsetting it with gains. Because if you go in and you say sell and have $10,000 worth of losses, but you're not selling any of your gains, you want to hold on to that Apple or something that has done extremely well. If you're not selling those gains, you can only recognize $3,000 of that loss on your current tax bracket, and then you can carry over $3,000 as well. But then essentially you have $4,000 in loss sitting out there that you're not using.
Yeah, so the maximum amount of losses that you can claim on any 1 year's income taxes is a $3,000 net loss. So keeping in mind that that's the total net loss on your tax return that you can claim. If you had, say, $10,000 in losses that you took, but then you had $13,000 in gains, well, you take $13,000 in gains, you minus out $10,000 in losses, and you have a net $3,000 gain. So it's important to note that's not the total amount of losses that you're allowed to take in a given year. That's the net. So if you if you flip that and you had a $13,000 loss that you're offsetting with $10,000 gain, then you'd be at that $3,000 maximum, and you'd be okay. And that just is going to effectively reduce your income by that amount, therefore saving you some taxes.
Yeah, and then the one other rule that I think we definitely want to consider is a wash sale.
Very important.
Okay, so can you explain a little bit deeper on the wash sale and what that means?
Yeah, absolutely. So a lot of times when people hear about this tax loss harvesting, go, oh, so I can sell something that's down, sell something that's up, and then, I'll go in the next day and just kind of repurchase that because I want to own that for the long term. And that's not the case. You actually do need to wait 30 days after that sale. And actually, you can't have any purchases 30 days prior to that sale either. Otherwise, you run into the wash sale rule. And what the wash sale rule is, in very simplified terms, is that they're basically going to, the IRS is basically going to force you to roll over your cost basis into that new position. Because what they're going to look at and think about, because of you transacting in such a short period of time, is that your actual intent was not to dispose of that position, but you
Just
were
avoid
basically just
taxes.
trying to avoid taxes. And the way that the IRS works is they generally try to avoid the ability for you to be able to do that. So what they're going to say is, well, that looks like it was really just one short-term transaction that you were just doing for tax purposes. So they make you kind of stretch that out for 30 days. It's important to think about because there's actually been times that I've done tax loss harvesting and I've sold a position that was at gain, sold a position that was a loss to offset each other, wanted to buy those back within 30 days, but then like earnings comes up or something like that, and the positions move dramatically in the wrong direction, and then I end up having to pay more, and then it basically offsets the actual tax effect that I just gained. And so it's something to keep in mind. The other thing probably to keep in mind is if you're just index investing and things like that, you might not have a great opportunity to do this unless, say, for instance, your like S&P 500 is up dramatically, but your emerging markets or international funds are down. Usually when people are talking about tax loss harvesting, most of the time they're talking about individual securities. You do see some of the sort of like robo advisors, Betterment and so forth, that are able to do it based upon the different what's called tax lots, the different sort of purchase dates that you have in the account. And sometimes you can do it between your stock and your bond side. So if you kind of have seen sort of some of your bond ETFs and things like that go down, but your stocks go up dramatically, you can kind of offset those with one another. So I think it's, for Sarah, I think it's a very valuable thing to keep in mind. Again, you don't want to necessarily manage your entire investment strategy with taxes, but you want to keep taxes in mind as you create and manage your investment strategy, because you are going to have to pay taxes. That's just part of the game. So keep it in mind. But don't let the taxes sort of determine everything that you do. Just kind of keep an eye on that. Now, what I do like about tax loss harvesting is that over time, what it is effectively doing is continually raising your cost basis so that in the future, you don't have this position that has a massive amount of gains at the time that you want to use it. And you're going, oh, should I take this money out to fund my goal? It's going to cost me this much in taxes.
Right.
Though at the end of the day, I mean, if you have a goal and you need the money, you're going to probably do it.
Yeah, I like what you said about kind of you don't want to focus necessarily on this, but it's a good thing to look at. And you have to get this tax loss harvesting done before the end of the year. So before December 31st, you have to do it. It may be a good thing around November, December, start looking at, hey, do I have an opportunity to offset some of the gains? Hey, this stock has done really well. Maybe I'll sell some of that and then sell some of the loss as well. So great question, Sarah. Really appreciate, you sending us in a question. Feel free to send us in video questions as well. We would love to use that and utilize it on our YouTube page. But great question about tax loss harvesting. Make sure you check out our Money Minutes to learn a little bit more.
And if you're in a fantasy football league, tell us who you picked in your first round of your draft in the comments below on YouTube, so I can see if I did better than others.
Absolutely. Let's hear about it.
Next year, we're going to have to get like a DIY fantasy football league or something.
Oh, we definitely need to do that.
14 listeners that we can go against. And
what's a quarterback do, Daniel?
They throw the ball.
Okay, good. I was worried you were going to say they were going to quarter from the back. So
No, it's actually, that name doesn't make sense at all compared to running back.
Yeah, I don't know where they came from that. I really don't know.
No idea. But yeah, put a comment below if you're in a fantasy league. I'm certain that pretty much any of our listeners could do better than I can. And if you've ever used tax loss harvesting in your portfolio, tell us how you've done that before in the comments below. How's your experience been with that? Are you like me where you've sold something only to see it over the next 30 days be less advantageous? Or has it been a successful strategy to you? Tell us in the comments box below.
All right. Thank you all so much and have a good one.